Thank you, operator, and thank you all for joining. Limeade CEO Henry Albrecht here to present our results for the full year ending 31 December 2021. Joining me on the call this morning is Limeade CFO Todd Sparks. Please note on slide 2 our important notice and disclaimer. This document does contain forward-looking statements. Slide 3, what we do. Limeade is an immersive employee well-being company that creates healthy employee experiences. Today, millions of users at over 800 companies in over 100 countries use Limeade solutions to reduce burnout and turnover and increase well-being and engagement, ultimately elevating business performance. Limeade has over 300 purpose-driven people across North America, the European Union, and Asia Pacific. As investors will recall, we are a software as a service or SaaS business with 94% recurring revenue in FY21. Limeade is the only company with world-class employee well-being, employee experience or EX, and listening solutions. Our portfolio includes 3 solutions that help companies hear more, know more, and do more to create a healthy employee experience. First, our flagship product, Limeade Wellbeing. Limeade Wellbeing is a refreshing way to infuse well-being into work and represented 79% of FY21 year-end CAR. Second, Limeade EX. With similar target markets to Limeade Wellbeing, Limeade EX is a holistic approach to the future of work and an EX solution with well-being at its heart. Limeade EX represented 8% of FY21 year-end CAR. Finally, Limeade Advanced Listening, which leverages the innovative Tiny Pulse technology acquired in July 2021. Limeade Advanced Listening primarily targets transaction sizes under $100,000 annually to employees with fewer than 5,000 employees. They also serve a select group of larger companies, both at the business unit or division level and enterprise-wide. Sorry, I believe I skipped forward. Okay. I'm back. Thank you very much. The first 2 solutions I forgot to mention do serve primarily employers over 5,000 employees, but also over $100,000 transaction size. So thank you for that understanding. They also, Limeade Advanced Listening also serves a select group of larger companies, both at the business unit or division level and enterprise-wide. This solution allows companies to hear more with annual and pulse surveys, know more with real-time dashboards and key driver analysis, and do more to improve the areas that matter most to company performance with coaching and recognition capabilities. Limeade Advanced Listening represented 13% of FY21 year-end CAR. Slide 4. Limeade has been investing heavily in delivering a modern, interoperable, and consumer-grade technology platform to serve our customers. The capabilities outlined on this slide, plus customers willing to take action to show care for their employees, based on pioneering science and best practices from the Limeade Institute, together drive a healthy employee experience. Turning to slide 5, our market opportunity. According to IDC research, the total addressable EX market, covering well-being, listening, and recognition, is predicted to be $70.6 billion in FY22 and is expected to grow annually at 12.5% through 2025. Limeade is uniquely positioned to help companies navigate massive structural changes, the decentralization of work, and the Great Resignation. Employee quits approached 50 million in the U.S. in 2021 alone, along with fundamental shifts in the way people work. There's surging mental health crisis. Limeade Institute data highlights that 57% of respondents feel very or extremely stressed, and nearly 1/3 believe their stress is unmanageable. Burnout is real. Less than half of employees believe their company cares about their well-being. Limeade remains uniquely positioned to infuse well-being into work and drive the most essential benefits and programs to the right people when they need them most. Slide 6 provides a snapshot of our revenue, CAR, and EBITDA guide performance over the last 5 financial years. As the chart highlights, We have seen our historical growth rates in car compress markedly in FY20 and FY21, concurrent with the COVID-19 pandemic. We're excited by what 2022 holds for Limeade as we continue to focus on operational rigor. The rows on the right of the slide highlight 4 major challenges we've experienced over the last 12 months. Surprisingly, over 50% of Limeade qualified sales opportunity did not purchase any solution from any vendor in FY21. So we diversified our portfolio by solution, geography, buyer, and company size. We invested in platform innovation in our flagship well-being solution, which is translating to strong first half 2022 pipeline opportunities. As we shared throughout the year, Limeade has experienced misalignment with our mid-market reseller channel partners, leading to churn for our well-being solution. The indirect channel commenced FY21 at 10% and ended at 3% of our total car. Our response has been to sell our solutions directly to the mid-market. Advanced listening car grew 8% in FY21, and NRR increased to 93%. We continue to upgrade our enterprise well-being customers to Limeade One, a single, modern, secure, interoperable, integration-ready platform. The Great Resignation also impacted us during the year, as our employee turnover was high compared to years past. In response, we optimized talent acquisition, strengthened our leadership team with a new Chief Financial Officer, Chief Marketing Officer, Chief People Officer, and several key VPs. We also doubled down on remote-first work at Limeade. These and many other steps have reduced our employee turnover. I would now like to turn the call over to Limeade CFO Todd Sparks to review full year 2021 financial results in detail. Todd?
Thank you, Henry. Turning now to slide 7, I will share key FY21 highlights. Our pro forma revenue was $56.1 million, down 1% from FY20. Note the pro forma revenue differs from statutory revenue of $55.2 million due to $0.9 million of deferred revenue adjustments associated with the TinyPulse acquisition. Note gross margins were down 2% to 76% on a pro forma basis. At the EBITDA level, we recorded a pro forma EBITDA loss of $6.5 million, down from $7.7 million on FY 2020, versus a statutory EBITDA loss of $7.9 million due to the deferred revenue adjustment mentioned previously, as well as $0.5 million of TinyPulse acquisition costs. Our contracted annual recurring revenue, or CAR, was up 3% on the prior period, principally driven by the acquisition of TinyPulse, our Limeade advanced listening solution, which I will comment on in a moment. Net revenue retention, or NRR, was 79%, down 8% from FY20, driven by significant churn in the indirect partner channel and the market conditions that Henry shared. We closed the year with $13.9 million cash on hand and no debt. Limeade maintains a $15 million line of credit, which is currently undrawn. Turning to our customer results, we added 13 new enterprise customers and 88 mid-market customers for the year, providing a total new customer count of 101. Our total number of customers is now 832, with 91 enterprise and 741 mid-market customers as at 31 December 2021. Average CAR per customer was $0.5 million, down $58,000 on the prior period, with our mid-market CAR averaged $9.7 thousand, similar to the prior period. Turning now to slide 8, CAR waterfall. Slide 8 highlights the FY21 CAR performance from the 3 Limeade solutions: Wellbeing, EX, and Advanced Listening. In FY21, the Wellbeing solution experienced a 12% decrease in CAR to $48.3 million, with new and upsell CAR of $5.4 million, offset by customer churn of $12.1 million. The gross churn of 22% is higher than previous reporting periods and reflects the termination of a top 10 customer, American Airlines, during the period, and continued significant indirect channel partner churn, as mentioned. Our EX solution delivered overall CAR growth of 33%, while Limeade Advanced Listening recorded 6% growth in CAR to 7.3 million. The net effect was overall CAR growth of 3.3% for FY21 to 56.8 million. Slide 9, turning to slide 9, which calls out Limeade FY21 CAR by solution and industry in more detail. Our customer base remains diversified, as evidenced by the pie chart shown. No industry contributes more than 25% by CAR. 56% of our CAR comes from traditionally defensive industries, including the education, not-for-profit, and government sectors, healthcare, technology, consulting, and transport and utility sectors. Although FY21 well-being CAR has been negatively affected by COVID-19, we have been pleased with the performance of Limeade EX and Advanced Listening, which have shown solid growth in CAR during FY21 and represent 16% and 8% of total CAR respectively. Turning now to slide 10, our statutory income statement. The 2% revenue increase is due to lower FY20 versus FY19 CAR, leading to lower revenue in FY21 versus FY20. The decrease from 78% to 75% in statutory gross margin was driven by increased resources needed to implement customer upgrades to Limeade One Wellbeing and EX solutions. Limeade sales and marketing expense was 32% and 31% of revenue in FY20 and FY21 respectively, while research and development expense was 30% and 37% of revenue respectively. The $3.5 million increase in R&D was primarily driven by increased platform investments and the addition of the Tiny Pulse development team in the US and Vietnam. General and administrative expense was 15% and 22% of revenue in FY20 and FY21 respectively. The $3.6 million increase was driven by increased headcount and increased legal and accounting fees, a portion of which was incurred to support the Tiny Pulse acquisition. Overall, the company recorded an EBITDA loss of $7.9 million and a net loss of $10 million for the year, both within financial guidance provided to the market. Slide 11 shows the pro forma income statement, which includes revenue that was excluded from the statutory results due to US GAAP purchase accounting associated with the Tiny Pulse acquisition, and excludes one-time acquisition costs associated with the Tiny Pulse acquisition. This results in a pro forma EBITDA loss of $6.5 million. Lastly, we show an adjusted pro forma EBITDA loss of $4.7 million, which is pro forma EBITDA less stock-based compensation expense, which, like the core EBITDA exclusions, is non-cash. Turning now to slide 12, we show the reconciliation between statutory, pro forma, and adjusted pro forma EBITDA. Just to remind investors, under US GAAP, deferred revenue that is acquired as part of an acquisition is written down by the cost to service that deferred revenue. And we also highlight the one-time charges associated directly with the acquisition. The resulting pro forma adjustment reflects the full revenue without this write-down. I would now like to turn the call over to Henry.
Thanks, Todd. Turning now to our FY22 guidance on slide 13. Limeade is focused on strengthening its core, the flagship North American well-being business, and returning it to strong growth, creating healthy channel partnerships, accelerating the growth of our EX and advanced listening businesses, investing in our pioneering technology platform to create stronger and longer-lasting customer relationships around the globe. We do all this to further our purpose, transform work into a source of positivity, energy, humanity, and purpose. FY22 pro forma revenue is forecast between 55 and 58 million, reflecting the conversion of FY21 CAR of 56.8 million into FY22 revenue. We anticipate pro forma adjusted EBITDA loss between $6 and $8 million, reflecting continued investments in our solutions and the people and technology supporting them. Turning to slide 14, that completes today's presentation. I would now like to turn the call over to the operator for the question and answer session. Please go ahead, operator.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you're on a speakerphone, please pick up the handset to ask your question. Your first question comes from Tim Lawson with Macquarie. Please go ahead.
Hi, gentlemen. Just one area of questioning for me. Thanks for the guidance in terms of FY or the calendar year 22. Can you just talk about the cash flow behind those numbers? I mean, obviously there's some. I think you're excluding stock-based expense, but can you talk about the cash flow behind the sort of EBITDA and net loss numbers?
Yes. First, I'll kind of take a general response to cash in general, and then Todd, maybe if you could touch on the specifics of cash flow. I think one important thing to know about the Limeade business is we have the ability to control our cash burn. We have a strong balance sheet. We've shown in the past that we can be EBITDA and cash flow positive, and we see an opportunity to invest in this TAM and this market opportunity in front of us. And so we've chosen to make some investments. I just wanted to start by saying we have no intention or plans to raise additional capital, and we have a strong ability to control our spend, most of which is people, and we control our rate of hiring, which has been, we've been growing our staff every year. So Todd, maybe any specifics on cash flow as well?
Yeah, Tim, it's of course difficult to translate the P&L directly to cash flow. What I have tried to do here is provide adjusted pro forma EBITDA, which in some circles is called cash EBITDA, to try and help facilitate that. Mindful that all the elements of EBITDA as well as stock-based comp, which we're calling adjusted EBITDA or cash EBITDA, are non-cash expenses. However, it's not going to translate directly because our cash flows depend on different customers and different products in different markets having kind of different collection and billing cycles. The vast majority of our customers do get annual billing, and so we recognize the cash some period of time after that billing event. But we do have, particularly in our mid-market customers, we do have customers, and we also have some enterprise customers where there is more frequent billing. And so, it's not going to translate exactly that way, but hopefully that gives you some guidance as to how to think about it.
And thank you. And just a follow-up to that, you talk about, obviously there's $13 million cash in the balance sheet and you flag the facility that's available, but do you actually anticipate, that facility being a key part of the cash flow of the business or cash facilities of the business, or is that just something that potentially down the track is usable if the business was in positive cash flow and had a particular investment it needed to make?
Yeah, we have no specific plans. No, go ahead, Todd.
Yeah, I was going to kind of go where Henry was about to say. We've built a business plan that does not require debt to finance our operations, either this year or beyond. We do maintain that line of credit for opportunities if there was some unbelievable opportunity to make an investment either in our organic products or services, or if there was an opportunity to acquire something, we might consider that, but it's certainly not something we anticipate using.
Thank you.
Thanks, Tim.
Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. Once again, that's star 1 if you wish to ask a question. We're showing no further questions at this time. I'll now hand back to Mr. Albrecht for closing remarks.
Great. Thank you, operator. And thank you all for your interest in Limeade. I look forward to meeting in person with analysts, brokers, investors during my time in Australia in mid-March, just in a few weeks. If you'd like to set up a face-to-face meeting, please contact Investor Relations at Limeade as shown on the current slide for further details. Wishing you all prosperity and peace. Onward. Thank you.